Say that yesterday, when we heard the European Commissioner for Economy, Paolo Gentiloni, talking about the EU recovery plan, he was also focusing on sustainability, digitalization, and a united tech Europe. And that includes a sovereign European payment platform. Or does it? Well, that's the big question. And our first speaker of the day believes that it is high time to get less dependent on the United States and Asian players. Now, he served on the Bundesbank's executive board since September 2018. And I'll cut it short because it's very hot here in the studio. And I want him to be in really good shape as he gives his keynote now. So please welcome Burkhard Balz, member of the executive board of Deutsche Bundesbank. Good to have you with us.
Thank you very much for the kind introduction, and it's good to be here. Thank you very much for giving me the opportunity to open the second day of Bitkom Digital Finance Conference. It's definitely a pleasure for me to contribute to this event. Bitkom is an important voice in the public debate about payments and digital money, and as a key representative of the digital economy, it is instrumental in helping to make digitalization more popular within German society and in facilitating dialogue with politicians and regulators to provide the right incentives for future developments. So let me kick off this day of hopefully fruitful discussions with a short talk on digital payments and what these have to do with European sovereignty. While payments might not appear to be the most compelling aspect of this debate, they are an integral part of our everyday life and, in a wider sense, the lifeblood of our economy. My starting point in this context is the recent acceleration in the pace of digitalization. Digitalization has become such an all-encompassing buzzword that it seems necessary to define what I actually mean by it. Simply put, I see digitalization as moving from the offline world to the online one. This shift has been turbocharged by the coronavirus pandemic. I'm fully convinced that there's no going back on the road towards digitalization. It is quite clear to see that digital payments are of great strategic importance, not only for the further development of efficient financial markets, but also for a prosperous economy as a whole. And at the same time, digitalization is not a domestic, but rather a global phenomenon, with a key role for few international players. In my view, the political conclusion that needs to be drawn from these two premises is as follows. We have to speed up our innovative efforts, and we need to do so in a way that also safeguards our European sovereignty in this sensitive market. So, how can we distinguish between digital and non-digital payments? And this is certainly a question that is not so easy to answer, because the majority of payments today are already conducted electronically. In order to illustrate the topic, I would like to introduce you to the House of Payments, which has different levels and is under never-ending construction. But let me explain. The foundation, or the ground floor, consists of cash payments. For centuries, an accepted, simple to use and quite resilient means of payment. And what is important here is that any account holdings as a basis for payments on higher levels can be withdrawn and transferred into cash holdings. But cash payments are by no means digital payments. Digital payments start on level 1, where you can find the classic payment instruments, so credit transfers and direct debits, which obviously work on the basis of electronic data processing, but are not necessarily triggered by an action carried out online. For a very long time, a paper-based instruction to transfer money directly from one account to another had to be transferred into a digital data set to be executed electronically. The same holds true for direct debits, which have to be initiated by the payee. Nowadays, we can say that the process is carried out completely online in most cases, since it is initiated either by the payer via online banking or via the online transfer of a digital mandate for a direct debit from the payer to the payee. Payment service providers reported 24 billion transactions to the Bundesbank for 2019. 3/4 of these transactions were credit transfers and direct debits, very often for recurrent payments. And only 25% of all cashless transactions were card payments in Germany. This set the German market apart from the euro area, in which 48% of all cashless payments transactions were card payments. But credit transfers and direct debits have also built a bridge into the digital world. They are very often used in their pure form in e-commerce. According to a publication by the EHI Retail Institute, payment on receipt of invoice was a payment method used for 30% of all e-commerce purchases in Germany last year. The direct debit in its classic form was used for nearly 18% of all shopping transactions online. And that brings me to level 2 of the payment digitalization. On this level of the house, I mainly see the card payments. These may be part of a direct interaction between payer and payee at the physical point of sale. They are initiated via a digital trigger. This holds true for all kinds of debit cards, including the German Girocard, and as well as for credit cards. However, in online shopping, only cards from international schemes can be used. And we now already find ourselves on level 2.5. Contactless card payments are even more digital than classic card payments. This is because they rely on extremely user-friendly near-field communication technology. And as we all know, contactless card payments have enjoyed a massive surge in popularity in Germany during the pandemic. And according to recent surveys undertaken by both Bitkom and the Bundesbank, we can expect the payment habits adopted during the pandemic to be kept afterwards in many cases. But the house of payments also comprises a third level of digitalization. Payment services that are introduced explicitly for online usage. And here it is important that the user perceives these to be purely digital by being fully integrated into smartphones or digital wallets. And of course, in technical terms, these might simply be an additional, highly convenient layer on top of other payment instruments such as credit transfers, direct debits, and card payments. And we are still looking at a fourth level, the level on which programmable payment methods, that is to say payments initiated by smart contracts in a blockchain-based environment, become available. For these kinds of payments, many people see a need for tokenized digital money. And it is true that there are some who would rather build a completely new house based on crypto tokens without the need for banks or central banks. Let us now look at our house of payments from the angle of European sovereignty. And I would like to draw your attention to the providers who offer these various kinds of payment services. On level 1, where we find credit transfers and direct debits, we act nearly completely on the basis of European rules. Credit transfers are direct, and direct debits denominated in euro are SEPA payment instruments with rule books drawn up by the European payments industry. In addition, the infrastructure on which these services operate is owned mainly by European banks, or in some cases by European central banks. I say mainly, since global equity funds have realized that the payments business, or at least parts of it, are quite profitable, with the result that some of them are involved in the consolidation process that is taking place among technical service providers in the payments business. So what is happening on level 2 in the card business? In Germany, everything looks fine thanks to the popularity of the domestic Girocard scheme. At the European level, however, transactions made with international card schemes on payment cards issued in the European Union accounted for nearly 68% of all card payments in 2016. And what do we see on level 3? Here we see definitely fewer European players. In the field of smartphone payments, the most successful players are the US big tech firms. Apple Pay in particular has managed to become an important fixture in the European market. And some no longer speak of customers but followers, especially in the younger generation. It is a similar story when it comes to online payment services. PayPal is a very important player with a German e-commerce market share of about 25% according to the latest ESI survey. One firm worth mentioning is a non-traditional European payment service provider in e-commerce is definitely Sweden's Klarna, which offers online payment services such as Sofortüberweisung. And when we look at the current market cap of providers like Klarna or Adyen, we can see that they have now overtaken the biggest German bank, which clearly illustrates where the market sees developments going in the future. The trend is obvious. The more digital the landscape grows, the more important international players become, and we should not forget that big tech firms are the ones running platform-based digital ecosystems into which payment services are increasingly being integrated as an integral component. It was against this backdrop that was known as Facebook Coin was formally announced in June 2019. It was given the admittedly clever name of Libra, alluding to both an anarchistic ideal of liberty and the origins of money and precious metals that were weighed in Libra. After renaming at the end of last year, the project is currently being continued under the name Diem. It goes without saying that platform-based services are convenient and potentially more inclusive. But we should not forget that from a platform's provider's perspective, it is of course very commercially lucrative to integrate a convenient payment service into a platform to make using it even more appealing. And there is also Google, which has started to develop its own complete service, not only for payments, but also for banking in the US. European sovereignty does not mean protecting the European market from external competitors. Openness to global competition is crucial if the European payments market is to foster efficiency and innovation. But we should also ensure that European players remain competitive and that we do not end up in a situation in which we are completely dependent on non-European players. So, what does this mean? First, I believe we need a pan-European solution for payments that is governed at a European level. It needs to be usable at the physical point of sale as well as in the e-commerce and ideally between individuals as well. This is what has been requested by the European Commission and the Eurosystem in their respective retail payment strategies. This task is, in my view, a job for the market players because it is their business at stake. And while I fully understand that this is not easy to reconcile different interests at the domestic or European level, simply going on as we have in the past is not a sustainable strategy in a rapidly growing digital world. Then second, we cannot just look up at payments in isolation. Future payments will be deeply embedded in broader digital ecosystems. We are on the cusp of building a complete digital universe in which people with electronic identities will interact with public administrations and private companies almost exclusively online, including to some extent for education and work. And to ensure that we are able to design this new world in Europe properly, we have to speed up our efforts to foster cooperation in network industries such as payments. Try to build walkways with other important houses such as e-identity and develop transparent and fair rules outlining how all these houses are to interact with each other within this new complex digital ecosystem. With that in mind, I personally look forward to the prospect of a European digital identity wallet as announced by the Commission last week. And then third, there seems to be demand to consider how we can integrate our currency into this new digital universe. I do not believe that crypto assets are the best answer to the questions raised by digitalization. I still believe that real money in digital form is much better placed to do that. And this could take the form of either tokenized commercial bank money or central bank digital money. Many central banks around the world are currently considering this option, and some, like the Bahamas, have already introduced their own CBDC. But it's also quite clear that the reasons for going in that direction are highly varied. The Eurosystem will decide in the near future whether to build on the analysis it has conducted and pursue a formal project. In view of this, I would like to raise the following points. We need to be clear about what we would like to achieve. Form follows function. Many observers equate CBDC with distributed ledger technology. That is, in my view, not necessarily the case, depending on the objectives we would like to achieve. And indeed, one added value compared to existing payment products would be to allow programmable payments. That should be an integral part of our thinking. In that respect, we also need to consider quick wins like trigger solutions, which combine the processing and DLT-based infrastructures with payments in conventional systems. And we have to think not only of the retail space, but also of the wholesale payments with regard to the settlement of securities in electronic form. With or without CBDC, the private sector will remain important. The customer-facing role should continue to be played by a private service provider. Cooperation and communication are key for this. While I generally prefer face-to-face communication in certain situations, digital formats without doubt also have their advantages. Namely, they are not subject to analog disruptions such as traffic jams or flight and train delays. And there's a new world free from these constraints ahead of us. And instead of dithering and doubting, we should welcome and even speed up this transformation. And if we do not, others will do it for us, and this will come at a price. I'm quite sure that the audience here today at the Bitkom Digital Finance Conference perfectly understands what is at stake. So let us all work together to ensure that our house of payments and perhaps our village, region, and country can also brave the storm of digitalization. So thank you very much.
Well, thank you. Thank you so much, Burkhard Balz, member of the executive board at Deutsche Bundesbank. That is a lot of food for thought, definitely for the entire day. But I'm absolutely sure for the fireside chat that is following right now. And I'm sure that State Secretary Jörg Kukies, you're very familiar with. You probably know already what he's going to say in response to what you said. But thank you so much.
Maybe that is the case, and all the best. But of course, it's good to have Jörg also on this fireside chat, because many of these payment issues we are going alongside, of course, thinking about what we can do from a German perspective. So thanks for having me here, and all the best for the rest of the day.
Thank you so much.
Thanks.
Thank
Bye.
you. Have a nice day.